Might help if I have my microphone on. Good morning, everybody. Alright, let's make today a great day. Just gonna randomly draw here for a little bit. That's not supposed to be grabbing onto that. So I want to mark that trade yesterday. After I left the stream, of course, the market ended up breaking down. And we talked about that kind of in yesterday's stream before I exited, is that we have to be very cautious of this red range. Now, it's kind of funny that in basically the after hours, they took that range almost to the very bottom, but they didn't, which means that this, I don't want magnet mode, is potentially forming a bullish cup. Now I do need to, my settings are all messed up right now, it's driving me crazy. Okay, so we had this cup to kind of contend with at the 7:45:34. Now I want to delete some of the drawings from yesterday because this inverse head and shoulders didn't complete. It actually was invalidated due to the overnight and pre-market. But with that said, where's our 20 mile? It's at the 46.37. Should probably be pulling down very slightly today. So let's mark this about might be lower, might be higher, but for now, that's kind of the range we're going to place that 20 mile, and that's the daily 20 mile, so it's, extremely important. Okay, so that's kind of what we're looking at today. Now, the reason why I don't think this is going to break down too much further, depending on, any news with the conflict, is that this inverse cup did not close yesterday. And I want to turn off the Bollingers to really show this. This inverse cup did not close. We were still off by roughly 60 cents, which may not seem like a lot, but that's definitely enough to definitely invalidate previous structures. Now, what we're kind of looking for the invalidation on the top side, which I'm going to hide the 20 mile for a second here, is that for us to completely invalidate any chance of this being a bearish structure, we need to pull up and fill this gap. Now the top of that gap again is at the 7:45:34. So that's kind of going to be our target today based on multiple different metrics. The 20 mile should be at that level. And again, on the daily time frame, I want to hide the drawings here. Sorry, everybody, I haven't had a chance to check chat, but good morning. But on the daily time frame, we are going to be seeing the 5 mile pulling basically to this 20 mile level today, which means that this upside test is going to be very, very crucial, both in determining if this trend is going to continue breaking down or not, or if we're going to start seeing the 5 mile bounce off the 20 mile. The 5 mod bouncing off of the 20 mod to the upside would be very, very bullish for the market. Whereas if we have the 5 mod pull below the 20 mod, that's going to really start to pull our moving averages in a bearish stance. So today's a very important trading session. It's really, really important what happens with our, if we continue heading downward or basically retest that level and either push to the upside or reject down to the downside. So that's kind of what I'm looking at for the daily moving averages. So it makes a lot of sense that we're going to pull upward today. And just based off of where the moving averages are at, essentially all of our support is above us on the chart, meaning the 5 mod, the 10 mod, the 20 mod, they're all above us on the daily time frame. And the closest support is basically going to be at that 20 mod level, wherever it's at, whether it's at the 746, whether it's, at that higher 745, we will need to mark that out, but that level is going to be very, very crucial because this is going to be both a 20 mod test and very likely a 5 mod test at the same time. So with two different moving averages that have to be tested through, that really kind of gravitates the market to that level. Because it's important to retest that level even if we're going to be heading downward further. So I am fully kind of expecting this cup to close. I'm expecting us to head up and at least touch those levels again. So with that said, the whole goal of the day kind of sort of, for the beginning of the trading session anyway, is to find a way to position calls. Okay. We are going to be trying to look for some downside to do that with. Hopefully they will give us some downside. But that's kind of the goal, is to be able to position some calls to catch that upside. The upside I'm really looking for is basically that 746, which means that we should essentially have the 745 calls watch listed today. So let me go ahead, get those watch listed. So I'm going to watch list the 745 calls. And for the puts, let's again target those 742 puts. And if we need to adjust which contracts we're taking, we'll adjust that later on. What about 746? We could target those 746 calls. If we're going to basically push to the top of this cup, that's going to be a really, quality contract regardless. So yeah, let's go ahead and add some of those 746 calls to the watch list as well. Good morning, everybody. No, I meant 744, not 734. I don't really expect a whole lot of chop today. It might seem like chop, but we have a ton of really important levels to basically break through right at this range. And that's kind of where I expect all that chop to be. We have the 5 mall and the 20 mall on the daily time frame sitting at that level. So there's a lot of reasons for us to push to the upside, even if the market's going to turn bearish. There's still a lot of reasons to push that upside before we continue heading downward too much further. So that's what we're going to be looking for. We will check the HIG and the VVIX a few minutes after open. We'll check the GEX and everything after open. Just make sure we're not playing into anything deceptive going on. But basically all we're looking for right now is an entry into calls to the upside. Now, potentially on the 1 minute time frame here, we could have a small head and shoulders forming, which doesn't look super likely. In fact, it looks more like a potential cup and handle. So we will try to get a pull down in the, earlier in the session, but I think there's a large likelihood that we could just be buying upward. So today's one of those days where I think that if we can get to the 20 MA on the 5 minute time frame, that'll be a good area to begin a position with some of those calls to the upside. Market opens in 3 minutes. I don't really want to have all these boxes all over the screen, but they're kind of important right now. Good morning. Yeah, so to the watch list, add the 745 calls, 746 calls, the 742 puts, and maybe we can take the 741 puts, but I think that might be a little risky. Um, how do you use Gex? So we have our Gex screener in the Discord, but let me go ahead and link it here 1 second. Sorry, I moved the tool area, so give me 1 second. Okay, there we go. So this is the Gex screener, and these are all going to be 0 DTs, yes. So for this, set the expiry to 1 DTE in the Gex screener. And it's not going to update just yet. Thank you. It's not going to update just yet, but once the market opens, give it a couple minutes and it should update and show basically where all the gamma is sitting for the calls and puts that are being written. So that'll tell us, very clearly what's going on with, with the market. Now I want to mark the 20 MA. So the 20 MA is at the 746.58, and the 5 MA is at the 746.31. So it's actually slightly below the 20 MA currently. Now I am going to wait for some form of pull down first before we engage in calls. There's that cup and handle I talked about, but with this handle being formed, we should be expecting a slight pull downward to form a, a nested handle on the nested cup. So we'll see if we get that pull downward. but I'm not going to be chasing calls into the structure just yet, even if there's room for it to run. Now, I want to check the VVIX today. I don't think it's open or it's loaded just yet. Okay, so it's at 91.61, so it's still fairly elevated, but compared to yesterday and the previous session, you could see how it's literally dropped like a rock. You know, that's over the course of 2 sessions where it pulled up all the way from the 85 to the 102 within a single session. And our HIG, a lot of buying out of our HIG today, so that's very positive. So if we can get some form of pull down here in the 5-minute time frame, we will be looking to engage on those 745 calls, but I'm not going to be chasing into them just yet. There'll be a lot of time to take different positions today, so I'm not too worried. This upside is looking very good though. Yeah, so we're gonna wait for some form of pullback first before we really engage the calls too much. Again, I'm really looking for that 5-minute 20-mo. 5-minute 20-mo is at the 742.79. I'm not sure we'll get that, but that level will be pulling up as the market pulls up, so we will find some form of reprieve to be able to pick up calls one way or another. And just waiting for a little bit of a pullback here. Because again, I really do want to engage in the calls. Now I want to see VVIX while this is going on. So it did pull down to 90.98. It's currently at 91.20. Yeah, I really don't like chasing calls into this just yet. I really want to see some form of reprieve. So we'll wait on those calls. When I check semis, so semis pulled down quite a bit here. That's working on bullish structure. So that next level is at the 589.77. So potentially, Success puts can do really, really good right now. So I want to look at a couple of those. And I'll type out the contracts in chat when I take them. So I'm going to take a couple of the Success 5 puts for this week. I filled those at 0.26, so let me go ahead and type that in chat. Okay. Now let's go ahead and look at the GEX now that the market's open. So just reloading it. Nothing really too much showing yet. A lot of puts are being written at the 740 and 742. But we do have a lot of calls being written as well. Now the top of this level is almost being hit. So that's kind of the trade that we're going to be working on today, is finding basically top of this cup and shorting down towards the 20 MA. So that'll be the first trade that we're probably going to be engaging on today. Now, top of that level again is at the 745.34. So once we get up to that range, I'm going to be very lightly taking on the 742 puts that we have watch listed. But you have to be very patient for the level first. Okay, definitely let that level hit first. And our VVIX is at -102, 102, so pulling down slightly. Now either they're going to push this gap first and then pull downward to basically give us that short position, or they're going to pull downward prior to that to build some liquidity, and that'll give us the call position to the upside. So we're being very patient here, but there's multiple good trades setting themselves up. Semiconductors still pushing down a little bit. Have that cup filled. From that cup, we do have some bearish structure at the top here. pulling down to form a handle to very likely continue upward. So that's kind of what we're looking at on semis. Now for the SPI here, just sitting in between all these ranges. But this is actually a very important range. This is the lower bounds of the 20 mile, and basically the lower bounds of the 5 mile as well, because those levels are pretty much on top of each other currently. So with the lower bounds of that level being tested, we should be expecting it to go all the way to the top. Doesn't mean it'll do that in a straight shot. So again, I kind of expect this cup to form, create some bearish structure at the top. We short that down, find the bottom of that handle for the breakout, to the top of those ranges. So something akin to that. Getting very close to our top range here. So the 735.34. Again, I will be very lightly taking some of those puts. And we're going to be very patient and wait all the way for the 735.34 to hit before we take these puts. Cup should be expected to fully close, and then we build bearish structure on top of that. Okay, and I'm going to very lightly engage on some of these puts here. Now, even with us starting our position with these puts here, and now we can go ahead and delete this gap now that we've secured it. With us starting some of these puts here, we do have to be aware that with the top of a cup, we do expect bearish structure. So this still can push upward a little bit further before this really gets into that major, downward short range. But I am targeting these puts to the 20 MA. The 20 MA is at the 743.17. So our market conditional order for those, I want to set to, let's set that to 743.25. Okay, so let me go ahead and type this out in chat. Okay, so I just want to put a horizontal array kind of at that level we're looking at. And I want to add a note to it. let's say 743.25. We will adjust it as necessary. Let me go ahead and move that over. Make this text a little bigger. Alright, got the order set up. So I currently have those SOXS 5 puts, which are basically semiconductor calls, and we'll be writing those over the next few sessions. And currently I have an entry, I have two entries right in here of the 742 puts. Now our volatility is still pulling down on the day, so we are going to be looking for a slight spike upward to really signify that, yes, these puts will work out. And our HIG still buying upward on the day, so that's a good signal for the market. Now for semiconductors, they did create this handle to the downside, just was not very large. And SPY is going for that 20-mile range currently. I want to drag this up a little bit, because that's basically the lower bounds and the upper bounds on the day. Volatility still pulling down here. I'm looking for it to spike slightly, especially now that we've closed this larger cup. Yeah, we have a ton of liquidity at this range. So I would expect the market to try to reclaim some of that before the full push to the upside today. Volatility starting to spike a little bit, so it was at 90.40 something. It's currently back up to 90.50. No bulls or no bearish structure yet. Now we will move our market conditional orders upward a little bit. But give me just 1 second. Volatility still isn't spiking in the way that I want to see it yet. So it's currently at the 90.38. I basically want to be seeing that pull upward towards that 91 range. Starting to get a little bit of a rejection here, but nothing too remarkable just yet. Volatility still pulling downward. So again, we want to see that pulling upward to signify that we're going to be seeing the top of this cup coming in and that we will be getting our downside. So for the market conditional order, we're going to move that up to the 743.47. And I will adjust the text. Volatility still pulling downward. And sorry, I haven't had a chance to look at chat too much just yet. Let's see semiconductors again. So semi starting to pull down a little bit. Starting to get a little bit of bearish structure in here at the top of this cup. Yeah, so we're going to keep our market conditional orders for the 743.47 currently. And volatility still pulling down. Was at 90.07. It's at 90.10. So we do want to be seeing this have a slight spike to the upside. Put premium starting to climb here. Good morning. And yes, we're still going to be looking for calls on the day, even if we see a rejection of this 20 mile range. With this cup being formed, we're basically just looking for wherever the bottom of this handle is. And that's where we're going to be targeting call entries. Volatility starting to spike upward a little bit. Now we might have to move our conditional order up very slightly, but it's still looking very good for our exit here. So I'm going to move this up to the 57 now. So instead of the 743.47, we're going to move it to the 743.57. And I will adjust this to show for that as well. But the whole thesis of the day is that we're forming a handle, pull down, buy the bottom of the handle, head to the upside, retest support. Volatility at 90.24, so starting to spike a little bit. So we're just going to be very patient and wait for our level here. There is a bit of liquidity in here that we might have to contend with, which that's all the way from the 744 up to the 744.80, then 744.17. So they might try to build like a right shoulder within that range, and this is on the 1 minute time frame. So that might be what they intend to do first, head upward and then pull down. And our volatility's at 90.22. And I want to check semis here. Semi's still working on pulling down, but we do have to be very cautious that on the 1 minute time frame this can be a cup and handle. So we're gonna go watch for that potential breakout on semiconductors. Volatility at 90.15, so not really giving us too much of a bounce yet. But everybody's put should be doing very, very well right now. And we're keeping our exit at the 743.57 for those market conditional orders. It did move upward to the 743.61, so we're going to change ours to 743.63. So let me go ahead and edit this, 63. Now again, I really want to pay attention to semis here because this can turn into a cup and handle very quickly, which would basically kick us out of that level on SPY. And our volatility is at 90.05, so not exactly spiking upward just yet. Now I am expecting semis to pull down further before, continuing to head upward at this point. But we do have to be super cautious because, again, this cup and handle can break out very, very easily, and that would absolutely carry the SPY with it. Especially with volatility pushing down to the 89.96. It's not exactly telling us good things about the puts just at this moment. So we want to watch this very closely, make sure that we're finding a put exit. I want to look at SPY here. Remember we talked about this head and shoulders? We just have to make sure that right shoulder actually completes and sends us downward. But that is looking very likely currently. So I'm just watching the VVIX and semiconductors on the side very closely here. Starting to see a pull down in semis, which is exactly what we want to see. Should be completing that right shoulder on that head and shoulders we talked about. Semis continuing to break down. And volatility is at 89.99. Should pop back up over 90 very soon here. Alright, so volatility is at 90.14. That should coincide and give us our push down that we're looking for. Do have a bit of an inverse cup forming on the 1 minute time frame as well. Now the 5-mod did move up to the 743.71. So we are going to move our market conditional order to the 743.75. Now semi starting to sell again, so we should be seeing our downside here. Volatility is at 90.12. Semi starting to pull down pretty aggressively, so our put should clear here very soon. Semi is continuing to pull downward. Alright, exit should be coming very, very soon here. Volatility at 90.07. Semis are still pulling down, so this inverse cup and handle should play out, should give us our downside. Pretty large breakdown in semis happening now, so volatility at the 90.03. Semiconductors also have a head and shoulders built here too. Sorry if you can hear my daughter. So semis breaking down, we should be seeing the SPY break down here pretty soon here too. Volatility is at 90. Come on, SPY, give us our level already. Semis are breaking down pretty hard now, so these puts should land. We need like, there we go. All right. Put exit hit, that is perfect. Okay, awesome. So what I'm looking for now, volatility is at the 90.04. I want to see semiconductors starting to buy up first before we enter calls. Okay, because again, semis have tons of bullish structure going on them. So that's going to be our signal of when to enter calls. So once we start seeing semis buy their bottom range, then we will engage on some of these calls to the upside. Now again, these are the 745 calls and the 746 calls. But we're being super patient and we're waiting for semiconductors to really tell us when that quality entry opens up. Now our volatility, let's check our vol. It is at 90.18, so it did pull upward very slightly. I will be looking for that to, eventually pull back down. Semiconductors starting to see a little bit of buying here. And let me see where this kind of coincides with what's going on with SPY. Now for SPY, again, remember we did close this bullish cut. So we are looking for that handle to the downside before pulling upward. So I'm going to very lightly engage on calls here. Again, this is just a very, very light entry here. I want to mark that as a successful trade with a successful exit. And now basically we're looking for the upside. We have all of our support above us, and we do have bullish structure completed. So basically just trying to find the bottom of wherever this selling is going to go. I don't anticipate it being too much larger. However, again, this is a fairly large cup here. This cup basically has the range of a full $10 to it. So, best case scenario, we'll pull down the lower Bollinger, and that'll open up a really nice call entry to the upside. So if we get to the 741.30, then I will be engaging into additional calls. I'm looking for that push down. Lower Bollinger is at the 741.06. Not fully seeing the buying out of semis just yet, so we should be pushing down to that lower Bollinger. Everybody should have done super, super well in those puts. I'm exiting my last runners now. Yeah, don't worry about the SOX puts. Those will recover throughout the week because there's a lot of bullish structure going on. Pretty much the entire reason why we're shorting today is for bullish reasons. We're expecting this to pretty much entirely be bought to the upside. So I do believe that the SOX S puts are going to do absolutely fine. Volatility has been picking upward. So again, it was at the 89.96. Now it's at the 90.77. So we are looking for this to start pulling back down again to signify that, our call entries are going to work out. So I have entered 2 call positions, all the same calls, they're all the 745 calls. But we are targeting the upper bounds of the 20 MA today. Okay, based off of all the bullish structure. None of it's been invalidated yet. Again, this is very, very ideal for us creating a handle to this cup. So I do like the calls at this range. Now semis here, we do have to be a little cautious that potentially they can aim to invalidate this cup, but that's not looking super likely just yet. That would require, a pretty hefty push to the downside. Basically a whole nother $5 downward in semis, which that can absolutely happen. Semis move pretty aggressively, but it's not something I really anticipate today. Volatility is picking up still. So again, I am looking for this to start tapering out. It's at the 91.28. Gonna very slightly add to our SOXS 5 puts here. But I really like this range. Again, potentially it can break down further, but we do have this very nice bullish cup formed here, and I think there's a lot of reasons for reclaiming support today. So I'm going to very lightly add to those positions. Alright, and I'm all set up. Made good money off the puts earlier. Now very lightly entered into calls. Those calls were super cheap, and if we get the upside that we're expecting to get today, then those calls are going to run basically not just at the money, but deep into the money. So that's what we're looking for. Volatility is at 91.41, so getting very close to the 20 mile in the 5-minute time frame, which that'd be a very, very quality rejection range to head to the downside if we're going to see volatility pull downward today. It looks pretty bad right now, but we're not really seeing the type of breakdown in semis or anything that would signify that, we're breaking this bullish structure. So I do think that they are trying to shake people out of positions prior to moving. Yeah, we're seeing semis holding fairly steady here. It looks bad, but they've basically been holding their ground ever since pulling downward. Now again, that can change very quickly. They can pull down all the way to the bottom of this this range and invalidate this bullish cup, but so far we're not seeing that. And because we're not seeing that as semiconductors, we should, very likely also not see that out of the SPY as well. So volatility did pull up towards the 91.60 and it's currently at the 91.49, so very slightly pulling back here. But again, we want to see it pulling back basically all the way to that 89 range to really signify that we're going to be heading upward. Semis are starting to buy up again, so I think potentially we caught this dip perfectly. I say potentially because day's not over yet. I don't want anyone to get mad at me. But this is looking very good. Okay. Um, Now how to handle this? Either we can use this 20 mil as the exit, which I'm still going to suggest that, regardless, because that's the smart thing to do with trading. Go from one Bollinger to the 20 mil, rinse and repeat. However, there's a very large upside in the day, and if I'm correct about that upside, then, these contracts we got down here are basically going to run a whole, $7 to $8 to the upside, which could be absolutely massive. So I really like the positions that we're in right now, and we're starting to see volatility pulling downward a bit. It was all the way at the 91.60. It's currently at the 90.87. So some good signals that, potentially this could be the bottom of this selling that we're looking for. Yes, I bought the 745 calls. Yep, 0 DTE. Hopefully everybody's having a great day so far. Yes, we could have chased some calls earlier, but I'm very hesitant to do that. I would prefer to see the structure form. Um, I think if anything, that was kind of the only mistake we've made so far is that we could have basically bought calls right at the open and rode them up towards that 746 range. But I was a little hesitant to do that. But this put play worked out super, super well. We basically got a whole $7 downside on those puts. So everybody should be doing very nicely from those. Now, from that, I did take a call entry at the 743 range because that was at the 20 mil, just in case we had to bounce off that level. And also took some calls down here when we started pushing into that lower Bollinger. So all I'm waiting for now is basically this push back up to the high of the day. Volatility has been pulling down quite hard. It's at 90.42. Again, it was all the way up at 91.60. We're seeing semiconductors starting to buy. So if you added some more of those SOX S5 puts with me in here, then they should be doing absolutely killer. And yeah, I think we're set up to have a really good trading session now. Sorry if you can hear my daughter stomping around. Now, any of the dated positions we want to add to today, I haven't really had time to sit down and go over them uh, over the last 2 days. So I really don't want to add or cut anything just yet. Now I know Uber has been looking absolutely terrible, which, you know, I'm super just hesitant on cutting Uber. Um, we have been seeing pretty bad structure within it, but it's not structure that's been invalidating the bullish structure. And because of that, that makes it really hard to cut because this still can run very hard. Now Starbucks finally seeing some upside. This was looking really shaky for a while, but we are starting to see that bounce starting to occur in there. So our July contracts should be absolutely fine, even if they're down very slightly. Let me check the 1 minute time frame here. Semis, potentially this could be forming a small cup and handle. Same with the SPY here. Volatility is picking up a little bit, so it's at 90, 95. Here that pulled down to the 90, 40 range. Volatility picking up a little bit, so it's at 90, 99. Now potentially this can be forming some form of inverse cup to the downside. If that occurs, then there will be that handle before we continue heading downward further. And within that handle, that's when we would try to, reposition some of those calls if necessary. But so far, not seeing the need to do that just yet. Now, semiconductors have went ahead and formed a smaller inverse cup here. So that's kind of two different bearish structures that we see back to back. We have this head and shoulders up here. Now this inverse cup closing down here. So potentially semis could be trying to take this liquidity range out. So we're going to be watching that very closely. Because again, if they do take this liquidity range out, then that does invalidate this bullish structure that was previously built. Which that would be a bad thing, right? to go ahead and delete some of these drawings just so it isn't so much to contend with here. Now I do want to see our volatility pull downward. It's currently at the 91.45. Now if this bounce does go through here, then that would make this cup and handle very viable on the SPY. We just have to be really cautious with semiconductors because now basically we have to see them pull up towards the 7 or the 576.45 to really invalidate some of this prior bearish structure. So need to be very cautious of that. Volatility at the 91.65. And I want to see what's going on with the HIG. The HIG looks fine. It was all the way down to the 97.64 today. It's currently at the, excuse me, 79.64. It's currently at the 79.73, so it is showing a little bit of buying in here. Basically at this point, just waiting for volatility to pull downward to show us that we're actually going to be heading upward today. Could I take the 748 call or the 749? I would say the 748. Um, if you really want to try to squeeze that out, I think that's reasonable. And also think that's within strike range too, because if we're going to actually get this upside that we're expecting, then we should be seeing, both the 20 mile and the 5 mile tested at the same time, which that really gives us that range between the 744 all the way up to the 748. Again, as long as we don't see invalidation of, our prior bullish structures, then that should be good to go. I would like to see a pretty big bounce out of semis here to kind of invalidate some of this bearishness going on. So between, wanting to see a big bounce out of semiconductors, also want to see the VVIX pulling down pretty aggressively. It is at the 91.78, slightly above that 20 mile range on the 5-minute time frame. So if there's going to be some downside resistance soon, then, I openly welcome it. Potential inverse cup with the handle forming here on SPY. still just a little too soon to say. Because even with semiconductors here having that inverse cup, we now have some liquidity for not just a double bottom, but a inverse head and shoulders, which that would be a bullish structure. Okay, that would be something suggestive of, taking us back upward. So we need to see the 750, I get my numbers wrong, the 576 reclaimed. Okay, that's super important on semis because that will invalidate some of that prior bearish structure. With the SPY, I'm looking for that 742.21 range to kind of invalidate some of that bearish structure. Volatility was at the 91.84, currently at the 91.67. So starting to pull back very slightly, but again, we want to see this basically at the 89 range today. Watching semis very closely because a lot of what their price action will do will definitely affect the SPY. Volatility's at the 91.85. So dealers are hedging positions here a little bit today. But I think if we could really break this level to the upside, then that would definitely shift that volatility. Now I want to reload the gamma. So let's see, there's a call wall at the 745, put wall at the 740. It says there's a volatility trigger at the 742 on the call side. So if we can break the 742 and really hold it, kind of what we're seeing with some of our structure here, then that's going to, really shift the dynamic of this selling that's occurring. I'll link it in here. It's under I think the spot that says information center. Really need to see semis pulling up to the 7 or the 576 here. A lot of chop going on in this range. Our volatility is still sitting at the 91.81. Starting to look like it might close this inverse cup to the downside. Which wouldn't be ideal for the, for our calls, obviously. See, it looks like semis want to push down to close this inverse cup and handle. Volatility is at the 92.04. Alright, and semis did push down to a new low of the day, which means that SPY is likely going to follow. Close that inverse cup. However, our bullish structure is still standing, which makes this very difficult. Now, I do want to see semis because if semis head down too much further, then they are going to completely invalidate the structure, which I believe they just did. So now we have this very large inverse cup here. But that's still a little bit of a struggle because on the 30-minute time frame, we still have this very large cup built. Okay. So even though there's invalidation of this smaller cup, that doesn't invalidate the larger cup. For that cup to be invalidated, we would need to push down all the way to the 532. Now in SPY, we have not invalidated this cup that we built earlier. We would have to pull down all the way to the 736.85 to invalidate that larger cup. So we'll see if that occurs. Let me just properly grab that level. No, I'm not cutting my calls or anything just yet. Because even with this selling going on, I do think that with some of these prior bullish structures formed, we could, still pull upward on the day. Especially when we have our support levels all above us, with the 5 mod being above us, 20 mod being above us. Those are all levels that we need to retest. Volatility is pulling up pretty hard right now though. It's at the 93.41. Looks like they're going to do the exact same thing that they did on semis. Yeah, they're going to invalidate that cup here, which is not ideal. Our HIG is selling off a little bit. Yeah, I can look at at Apple. So Apple did hit the lower Bollinger today, but it really does need to close below that level to secure that lower Bollinger move. Lower Bollinger move, day one, we expect a close below the lower Bollinger. So that would mean that for Apple, we'd be expecting basically below that 291 range for it to hold there. Day two, we would be expecting a lower low into upside consolidation. Yeah, semis are just selling off pretty hard right now. Would have been great if we kept some of those puts. Those puts would have been absolutely killing it right now. So we do have invalidation of this cup here, which is a little bit of an issue. But the next level to really look for is at this 733. Basically back into this liquidity range right here. So either we're going to get a bounce off this level, or the market will aim to very likely take that entire range. So that's kind of what we're looking for next. On semis, now on the SPY, what a mess. Volatility is picking up very, very, very aggressively today. So it is at the 94.69. So basically we just need to find the bottom of the selling. Volatility did pull up to the 94.73. It's currently at the 94.57. Doesn't really matter a whole lot. We need to see this pull down multiple dollars today if we're going to be getting any upside. Now if we do pull all the way down to this 733.50, that's going to be very, very bad news because that will be invalidating this entire previous bullet structure. And we see this double top formed in here too. Basically right at that 20-mile range on both days. Give me just 1 second, everybody. Alright, so we're seeing a little bit of buying out of semis, but we have a long way to go. Okay, so I want to look at starting to see a little buying in here, but not a whole lot yet. What we really want to see is our volatility pulling down very, very heavily. It's currently at 94.08, which, yes, that's pulled down, you know, roughly a whole 70 cents, but that's not very much yet. Again, our volatility was at this 89.96 range today. So we do need to see it pull down, you know, multiple dollars to really signify that the market is going to attempt to buy upward. Sorry, just give me 1 second. I'm trying to look at something. Okay. So that broke down. Hold on, let me say bye to my daughter really quick. Alright, I'm back. Yeah, so I still have some of my calls going too. We need to get, you know, a pretty large bounce though. We need to be seeing our volatility pulling down very, very aggressively here to really signify that we're going to be, you know, getting the bounce that we're expecting to get. The good thing is that calls are really cheap now. So if we're going to get a bounce, then, you know, the 739s, the 740s, 742s, all super cheap. And technically we are at this lower Bollinger on the 5-minute time frame, which makes this a a quality buying area. So I actually think I'm gonna take a couple of the 742s, even though the market is just absolutely cliff diving. So went ahead and added to my Soxus 5 puts as well. Volatility at 93.30. Again, we want to see this all the way back basically to that 89 range today. QQQ would have been super good to play, because basically they just gave you the put entry into pure downside. So seeing a little bit of reprieve here, but this is still way too soon to really determine if the market's going to be turning bullish or not, because either this reprieve's actually going to take us somewhere or it's just going to pull us right back down again. But we are starting to see volatility pull back, which, that's a promising signal. Was all the way almost at the 95 and it's currently at the 93.10. The HIG did drop all the way to the 79.60 and is currently at the 79.67. So buying in HIG is usually a bullish thing for the market. You're welcome, BT. I'm glad you're having a very good session. Volatility still pulling down, so it's at the 92.91. I haven't checked the news to see what actually caused this massive spike to the downside, but very likely had to do with something with the conflict. But yeah, I really like these 742 calls here. I think they have a lot of potential if we continue seeing this selling tapering. Now I'm gonna mute just for a couple minutes. I'm still gonna be around, but I'm just gonna be muted. I need to drink a little coffee and take my medication so I don't turn loony, but I will be right back. Alright, sorry about that, I'm back. Okay, let's see what's going on. Semis slowing down the selling just a little bit. Volatility still elevated at the 93.63. Potentially starting to see a little bit of bullish structure here at the bottom of SPY, but far too soon to really, determine that just yet. Now, I did take some of the very cheap 745 calls for tomorrow, because if we're going to get our upside, then it should be, pretty dramatic from this point forward, seeing how heavily we did sell. Volatility is still pulling downward, 93.34. Semis starting to buy up here a little bit, but we want to see not just a little bit, we want to see a lot of it. Same with SPY here, we pretty much want this 740 level reclaimed. So the 5 mile was tested on last Thursday, I believe. And the 20 mile technically hasn't been fully retested yet. Yesterday they just barely touched the level. Today they just barely touched the level. Not really what I consider retests or rejections of those ranges just yet either. So that's why I kind of expect a lot of this might just be grabbing liquidity. I can be wrong about that, but from what I'm expecting, I still expect to kind of pull up towards that 20 mile range. May not happen today. We'll have to make more of a determination of that when we get closer to the 5-minute 20 mile. But if we continue seeing buying, if we continue to see the volatility dropping, then those are all, strong signals that we should be heading upward. And where's upward from here? Well, all of our support's above us. Okay. This is the daily time frame. So as you can see, the 5 miles at the 7:45:12, the 10 miles at the 7:50, and then the 20 mile is at the 7:46:28. So if we're going to aim to retest or even reclaim support today, then, there is quite a lot of upside. Now, the other situation would be that the market just wants to kind of free fall and we drop all the way down to the lower Bollinger. Now, I'm not really anticipating that to occur today, but that's something that, we could be potentially looking at within the next few sessions. But even with semiconductors here, when we hit that 20 mile range on the daily time frame, it likes to bounce upward quite heavily. And we see that over the last 2 times. Even with this last 20 mile retest, we have bounced upward quite a bit. In fact, today could have been a retest of the 5 mile and 10 mile, which that's at 578 and 577 respectively. So I don't really think we're totally in bearish territory right now. Um, that would mean we would need to basically reclaim this range on the day for semiconductors. You know, anywhere in there would keep the market bullish. Might seem like a, you know, fairly. I can't talk right now. I apologize. Give me a second. Sorry, I'm still dealing with this stupid pneumonia. It's driving me crazy. But if we can pull back up towards this, you know, basically uh, not 575 to 580 range, then we'll be working to reclaim our short-term supports on semiconductors. If we can do that on semiconductors, then that will, you know, very heavily, you know, tell us that very likely we're going to do the same on the SPY. Hold on, I need to drink something. I can't talk. Okay, my voice should be a little better now. So if we see volatility defeated today, which I think, you know, absolutely can happen, even with how hard of the selling we've been seeing today, they haven't really been selling to any specific range. Again, going back to the daily time frame, it's not like they're trying to sell down to the lower Bollinger or to a specific support or anything. You know, technically all the supports are above us. So unless they're really trying to push the market to like this 50 MA or the 200 MA or even the lower Bollinger here, um, the continuation of selling doesn't make a whole lot of sense from an algorithmic perspective. Um, from the algorithmic perspective, I see the upside test coming. But we need not just the algorithmic perspective to align, we need the, you know, actual market to align with that as well. Volatility at the 93.72. So not entirely done selling just yet. Potentially starting to form a head and shoulders in here on semiconductors. But I will be looking for that to invalidate. But something we need to mark out anyway. Kind of the same thing with SPY here. Potentially that head and shoulders. Apologize, my voice is just randomly giving out again. It's been really frustrating to deal with it. And on volatility, we could potentially have this cup and handle forming. But I'm still looking for volatility to pull down within the day. Yeah, I would have the Tenma on there. The Tenma is not something that I specifically look for, but it for me is more of a short-term indicator trend. So if the 5 mile is below the 10 mile, then that's short-term bearish. If the 5 mile is above the 10 mile, then that's short-term bullish. So that is something I like to look for. Still too soon to say whether we're going to fully continue downward from here or not. Yeah, it does look like a pretty nasty inverse cup and handle forming here. But some of our bullish structure hasn't been validated yet. Um, which means that even though this looks like an inverse, or this looks like a inverse cup and handle, or a, potential head and shoulders, um, potentially this could still be a cup and handle forming to the upside. Especially when we're looking at our OBV slash ADL. Even with all this very, very heavy selling in here, it hasn't been really moving us a whole ton to the downside. Um, which could mean that the inflows can pick this up very quickly. It's hard to take continued puts into here because they really haven't given us much of a reprieve from the selling yet. So it's sort of like if you didn't get those earlier puts with us, then kind of just getting chopped out currently. I didn't see any major news. Um, Let me go ahead and just take a look. No, I'm not really seeing anything. This might just be a lot of liquidity for the SpaceX IPO. Which no, I'm not very thrilled about. I don't think that's a good deal at all. Volatility pulling back up pretty heavily, so it does look like our selling wants to continue here. We'll see if semis claim all the way to the bottom of this 552.64. It's looking very likely they're going to break this entire this cup structure that we're looking at, because the bottom of it is basically at this 733.28 range, which is not very far from where we're at. What a wild day. Volatility still rising, so at the 90 or 94.78. Was at the 94.80 something, but it just shifted. QQQ still has a little bit to go before they fully break this bullish structure. But SPY is essentially working on that right now. So that bullish cup and handle that we've been discussing for the last few sessions has been obliterated. So now we have this nasty inverse cup. If you'll let me draw it. So with this inverse cup formed, and with the bottom of this cup basically being hit, we should be expecting some upside reprieve. Okay, now I'm not expecting all the way to the 740 or anything like that, but we should be expecting a little bit of upside reprieve to start building in here. And from that upside reprieve, that will be how we exit our calls today. So don't just panic sell your calls at the bottom here. Give it the time that it needs to build upward again and reclaim a little bit of that premium. Would have been great if we held those puts all the way from the top to now. You know, those would have ran $14 in the money. Really did not expect this today, let me tell you. Did not see a lot of signals of this at all, other than basically when we got to that range where we did sell our puts, volatility started spiking up really aggressively. Yeah, let's look at the Gex again too. So we are currently below the put wall, which is at the 738. Which means that if we're going to be seeing any reprieve today, then that's kind of the range to target. I know the puts that I had this morning would be worth so much right now. Yeah, those 742 puts are currently almost $1,100 per. Absolutely obscene. So for the calls for the upside, I am looking for those 738 calls. Yeah, so I want to look at these 738 calls, even with the market selling. We did close the bottom of these inverse cups. And because of that, we should be seeing a little bit of reprieve regardless. So I'm going to take some of the 738s at this point. Now our 20 mall is at the 738.63. So if we are going to be seeing that upside reprieve, that's kind of the range that I'll be targeting. I know I had the 742 puts. Yeah, I'm kind of upset about that too, because we would have been absolutely just banking today. So with that said, okay, let's get a handle on things again. Volatility is still picking up very greatly. So it's at 96.53. Would have been really nice if they decided to do this before we sold our puts. Kind of frustrated about that. So looking for the reprieve bounce. Again, we're going to be looking towards that 20 mall. I am looking towards that 738 range because again with the gamma, um, we have that put wall set up at the 738, which means that if the dealers want to, attempt to buy this up, then that's going to be the range that they're going to do so. The 96.49 for the volatility. Nothing really showing us structurally that we're going to buy this up just yet. Semis have just been absolutely destroying level after level after level today. Volatility is at the 96.54, so still very elevated. Technically at the high of the day. It's absurd to see the amount of selling we're seeing. Those put contracts we had earlier would have been like $1,200 each. Starting to get a little bit of reprieve here. My 738s are actually green at this point. Yeah, let's check what's going on with semiconductors. A little bit of buying reprieve. Not a whole lot yet, but it's starting a little. Volatility starting to pull back a little bit, so it's at the 96.30. SPY starting to buy upward a little bit. And I have very slightly added to my Soxus 5 puts. And volatility starting to pull down a little bit. It's at 96.21. Yeah, I know. I'm I'm super, super mad about those puts. I had 20 of them. That would have been absolutely huge today. So, not happy about that. But at least we were able to secure some puts because earlier today it did look fairly bullish, and I feel like a lot of people were not able to secure any puts at all. So I'm thankful that we were able to at least get a little bit. But yeah, it does hurt. Um, it absolutely grinds my gears when days like this happen. Basically just waiting for semiconductors to start buying upward and for our volatility to start pulling down pretty heavily. Now we're starting to see a little bit of buying out of semis, but again, semis are down basically like a whole, $30 on the day. So we need to be seeing like, $15, $20 upside to really suggest that there's going to be some buying going on. Yeah, you're likely right though, Sean. It's likely due to the inflation data coming out tomorrow. The forecasts on the CPI data coming out haven't even been that bad, but I do think that they're going to be a lot higher than what the forecasts are, showing for that. Now, our 20 mile is currently at the 736.78, but again, we still have a very large put wall at that 738, which in my mind, that's telling me that the dealers very likely want to take that level out. Now, the levels have shifted a little bit. So the new put wall is at 730. The call wall is all the way at 740. So we shouldn't drop below that, the 730 at least. Basically, no calls are being written today, though. Almost entirely puts at this point. There were some calls earlier on, which, that was in the 743 to the 746 area. Basically those calls that we were looking at earlier. Now we've dropped below that level, and pretty much nobody's taking calls at this point. A lot of people are taking the 735 calls, or at least took those calls, and there's a large position starting to build at the 730. Volatility still elevated here. Still at the 96.36. Again, if we're going to be seeing buying, we need to be seeing our volatility dropping quite heavily. Volatility still sitting at the same spot. Let's see what's going on with semis. They're just continuing to break down. Now, even though I am taking some calls to the upside, make sure you're not over positioning on this because, obviously today's selling is absolutely, very, very real. Um, while we might have all of our support above us and everything, and from the algorithmic standpoint, it would make a lot of sense to reclaim that level, but obviously we're seeing an absurd amount of selling. So don't go very heavy into these upside calls. If the upside's going to pay off, then just a few calls are going to, you know, pay their weight very, very well. So make sure you're not trying to, full port catch this upside. We are seeing some bullish structure starting to form here, which that is very welcome. And volatility is at 96.01, so it is starting to pull away from the highs of where it was. So if this upside bounce is going to occur, we want to be seeing our volatility continuing to pull backward. And we want to see semiconductors buying along, alongside us. We absolutely do need that weight from semis to really push upwards, so Volatility back up at the 96.39. So they're really just staying glued to this range. I don't mind the downside selling, it makes it really hard when there isn't a quality opportunity to add any additional puts into this so far. Technically, we've just been pretty much sitting on this lower Bollinger the majority of the day. We had a little bit of a reprieve in here, but we didn't even get towards the 20 mile before selling downward again. Volatility pulling up pretty heavily again, so at 96.59. If we don't get some upside reprieve soon, I'm just going to cut all my calls and pretty much call it a day. Yeah, thank you, Jared. I'm glad you had a great day. And just a reminder, I am going to be teaching a class tonight, so that's at 8 p.m. Eastern Standard Time. It will be just, basically starting from the very, very, very basics of trading, and over the next probably 3 to 4 months, we'll be gradually increasing, um, you know, the depths of what we discuss, whether it's going into options, going into the Greeks, um, talking about symbols, derivatives, all that good stuff. So I do apologize for us not holding on to those puts all day. Um, that really kind of bothers me because we basically exited right here. We had an exit at the 20 mile, but we also had an exit right there. But we missed this entire downside, which is really, really massive bummer, especially when we had the positions at the perfect time. Volatility just picking up again, so they're getting ready to leg down even further. Yeah, 97.42 for volatility. It's really picking up pretty heavily. So is today going to be some like negative 2% type day again? Those puts from this morning would be almost 1,400 each right now. What a shame. So I'm closing a lot of the earlier calls that we took because they're really not giving us any form of reprieve whatsoever. I'm still going to be holding those 738 calls for the moment anyway, but this is looking like a pretty deep selling day. Yeah, it is a good time to set up some long-term bullish positions. But on the daily time frame now, it looks like we're getting ready to pull into the lower Bollinger, which is just absolutely absurd. This is the move I was expecting a few days out, not happening in a single session type thing. So lower Bollinger is at the 727.97, and this is the daily time frame lower Bollinger, so has a lot of weight to it. That means very likely, if we're going to be claiming that level, we should be closing below that 727 range. At this point, we just need to kind of prepare for that further downside today. They haven't given us any form of reprieve to really even grab positions into that either. But if we do get any reprieve, then targeting that 727 is going to be kind of the trade to take. That's if they want to give us any reprieve. So far they haven't. So waiting for some form of upside so that we can take additional puts. Very kind of disheartened about today because we absolutely nailed the trade. Just I did not see this type of downside on the day. Yeah, I'm waiting for an entry before taking puts. Um, we really have not had a quality put entry other than the put entry we had earlier. Um, we really need to see something pull back up towards that 20 mile range to give us further put downside. So even though it's hard to wait for that level, I would be really, really, really waiting for that level. Same with semis. Semis have not given us really a range to enter puts into, other than right here would have been acceptable, but we would have had to basically enter below that 20 mile range. VVIX at the 97.73. It would be super ideal if we can get it pull to the upside, position some additional puts, and then right towards that 727. You know, that's kind of the current goal. Basically something like that. But so far they haven't given that to us yet. I just wish we had a couple more signals earlier on that told us that we would be selling as hard as we are. We left a lot of profit on the table today, which was very hard not to, because by the technical standards, we did push into the lower Bollinger right here. That, you know, was the very, very quality exit on those puts. Started to pull up again, and you know, we were getting all the signals that we were looking for. We had a bullish cup. This looked like a handle starting to pull up again, and from that pull up, it just full on rejected. So that's very hard to catch. It would have been different if we saw, you know, volatility picking up a lot faster, or if we saw, you know, the HIG selling off or something, but we didn't. We actually saw the HIG buying up at this level. And we actually saw volatility dropping pretty steadily when we did pull down towards that range. Housing market news. Let me see. See existing home sales. Um, the previous was at a 0.7. This time came in at 3.2%, so very elevated, but usually home sales aren't going to be affecting the overall, you know, market. Sometimes it can, but this type of data report, not so much. Imports and exports look fine. We had a weaker ADP this week as well, which technically that should have pulled the yields upward, which should have been, or should have pulled the yields downward, which should have been, you know, fairly bullish for the market. So I'm not really seeing anything data related that's correlating to um, this type of selling. So I'm just trying to read through all this news really quick to see. Not really seeing anything out of the conflict because last I checked, oil prices are down. We see USO dropping pretty steadily today. Was all the way up at the 132. So the selling really isn't related to what's going on with the conflict. And I'm not seeing any sort of AI or tech-based news. Yeah, they're giving us zero reprieve here. This is just this is just abhorrent to try to take positions into. Basically, the trade was just blindly holding those puts all day. That would have been the trade. But so far, we haven't had any reprieve. We haven't been able to even catch a glimpse of the 5-minute 20 mile. Basically since the beginning of this morning. And our volatility is now at 98.12, which is just obscene because it was at the 89.96 earlier. Today's just very frustrating because we didn't do anything wrong. We traded the day very well, actually. Especially that first put trade. That went exactly how it should have went. The only issue is that we weren't able to catch any sort of reprieve to reposition anything. It's just been a straight stretch downward. The call entries too, even though they didn't pay out, you could see that at each entry we did take those calls, there was a small bounce. Now it didn't go to the 20 mile like we would anticipate it to do, but there was a small bounce at each one of these call entries. So just a very frustrating session. No, it's not too late to chase puts. It's just we want to wait for some form of reprieve. Okay. Um, because yeah, you can ride these puts downward, but you really want to wait for that entry at that 20 mile. Um, but then again, technically if you took puts during any of this time this morning, it would be doing very well. I'm still expecting a relief bounce because even from a bearish standpoint, you would expect, some form of relief to add more puts into to continue downward. Volatility is just continuing to pick up. It's at that 98.58. So this has taken us all the way from our green area, which means that there really isn't any selling going on, through the cautionary area, now back into the red, all within a single session. So that usually does not happen. This type of selling is just very, very, very extreme. So if we can't get any form of reprieve today, we'll be looking to enter into some of those 727 puts to the downside to secure the lower Bollinger. But I don't want to be chasing into puts without actually getting that reprieve bounce. Which, based off of today, that may not happen. Again, we're continuing to see our volatility just skyrocket. No worries at all, Brock. I mean, technically, everyone who's been following shouldn't be really down on the day, other than down on a couple call entries. Um, but everybody should have taken puts up here with us. So we are now below the lower Bollinger on the daily time frame, which means that if we're going to keep this level, then we're going to be closing below that range. Which means not today, but tomorrow there will be an opportunity to position some dated bullish positions. But today we're just going to very likely hold this range. And those puts we had this morning are $1,500 each. Really, really, really disheartening to see that. Semis continuing to break down as well. They're below the 20 mo. Still have quite a long ways before they head towards their lower Bollinger. Currently right now we have no support price. We're basically going to be closing below this lower Bollinger on the daily time frame, which means that anywhere from at this level to that 727 is where we should be closing at. Volatility's at 99.44, so it's just continuing to pretty much skyrocket. Yep, those puts would be close to 1700 a pop now. Very frustrating. Right. Yeah, today's looking like they're not going to give us any form of reprieve here, which is unfortunate. Um, Not much to do about that. Yeah, I was expecting 731 to happen over the next few sessions, but not today. I fully did not expect us to go from the 746, almost 747, all the way down to 725. Now, if we can get any form of reprieve bounce, then that'd be nice to be able to take additional puts into, but so far we have not done so. Yep, that Spax put is absolutely killing it for you. Great job. Are we heading to the 724? It's hard to say, because again, for the daily time frame, we're technically at the level we need to be at. We just need to close below this 727.44. Um, obviously we're very far from any form of support. Now, the next support below us would be at that 717.26 for the 50 MA. But usually you don't see the market try to push for that specific level. Usually that's more of like a longer term indicator. So if we can get our upside reprieve here, then we will be taking additional puts. But I want to see all the way back up to this 20 mil. Yeah, if we can get the upside basically back up to the 20 mil, this 732, then that'll be a really, really, really good area to take those 720 puts into the close towards today. Which that's very likely what I'm aiming to do here. Assuming we actually get to the, the 5-minute 20 mil. Volatility pulling down a little bit, so it's at 98.99. Was all the way at the 99.50. So this might be our reprieve bounce in here. Which if it is, we're going to make sure we take full advantage of it. So I'm adding the 727 puts to my watch list. Just in case we do get that upside, then I'll go ahead and try to engage on some of those contracts. Today really hasn't been a difficult day, it's just been kind of discouraging when we cut our puts, so early in retrospect. Even though, again, I stand by that trade. We did very good on that trade. It's just, there was a ton more downside to it. And technically, not selling through these lower Bollingers would be kind of irresponsible anyway. So, it's like if you didn't sell at that lower Bollinger when we originally sold our puts, then we would have pulled upward, pulled down that lower Bollinger. Then that would have been another really opportune exit, pull back up, rinse, repeat. In hindsight, it's it's hard to look at because, you know, we had the positions at the top here. We had those super quality positions. We could have made absolutely killer money. Um, but from the technical standpoint, we still exited at our opportune exit. Well, we weren't exactly going against the main trend. Um, I mean, technically, we had positions riding into this trend. Um, it's just that once we got to this range, we started to see the what looked like to be a bounce. And not only that, but we also had, plenty of bullish structure still built. So this looked like, okay, top of that cup was hit, bottom of this handle, starting to bounce. It's looking very good for, the calls to the upside, exiting those puts to the downside. But that didn't happen. We had a further breakdown. And from that further breakdown, we, we invalidated this larger cup, and that told us, okay, well, we obviously want to try to get into additional puts, but we never really got that quality entry. We pulled up slightly here, but dumped back down, pulled up barely, dumped back down. So it wasn't like we were really trying to fight the trend. Let me look at the hourly. Yeah, I see that gap you're talking about. Definitely can. But I think the volatility is just very, very, very stacked today. And that's going to kind of, you know, beat anything else that's trying to form here. It's like if we could get some upside reprieve, that would be really ideal because then we can take puts to the downside. But I'm never going to just take puts at that range. Um, technically that's call range, that's call range. And you could see that too. Once once we bought those calls, we did have a small bounce. It just wasn't the bounce we were expecting. Pull back downward, a little bit of calls in there, had that bounce, not the bounce we're expecting. Yeah, we had the daily time frame below the 20 MA, but before a lot of this price action started, the 20 MA was at the 746.52 if I want to remember right. And with all that bullish structure potentially built there, that was telling us that, okay, we have this 20 mile range, which this is what I have marked out with this purple uh, box right there, is that we had the 20 mile range right above this cup forming. Okay, so we had this cup form, and we did have a little bit of a rejection. But what I was expecting out of that rejection was, to pull down, form a handle, pull back into that level because not only do we have the 20-day moving average there, but we have the 5-day moving average there as well. So two very, very crucial ranges to test at that point. I did not expect the cup to get blown off and just, you know, completely head down like that. Now we started to see some signals of that, and it was mainly around this point when we saw the cup become invalidated, which told us, okay, invalid cup, that means we're going to be heading downward. Now, from heading downward, there's all sorts of gaps that could have been taken. And that's what we were trying to identify is that, we had liquidity at that 736, we had liquidity at the bottom of this 733, and so far they've just absolutely blown past both of those ranges. So it's not like we were trying to fight the downtrend or even try to catch some major bounce or anything. It's just that with the earlier structure, we identified bullish structure, starting to pull down from that handle, exited at the bottom of, where we see the lower Bollinger being pushed out of, and that potential bounce starting to occur there. And at this time, volatility wasn't picking up very, very much. I think volatility was still around that 89 or 90 range. It wasn't really until we had that massive candle to the downside that completely invalidated all that bullishness where it's like, okay, we exited our calls, we exited our puts early, we had some calls going that just gapped down on us. Now that it gapped down, it completely invalidated that bullish cup. It's telling us that we're pushing away from those daily moving averages. And so we were kind of in this area in between where it's like, okay, are we going to try to build some support in here and reclaim those moving averages? Or are we going to try to build some support and then push down to the lower Bollinger? Well, no support was built. They just went straight for that lower Bollinger, which didn't really give us, a very good opportunity to add additional puts into that. Now, we could have added puts at this range, but that's still really not where I like to take puts. But that probably would have been the best range to have taken those puts at, based off of, kind of everything else that happened within the trading session. So that would have been the range, but that was a very tricky range, and we did miss that range. And because we missed that range, that means that, you know, we just got gapped down on very, very quickly. Once again, trying to catch not exactly some massive support up test, but really I just wanted to see that 20 mile again so that we can push down towards that 727. But we didn't get that either. It just went straight down. So it's been a little difficult in terms of that because what we did up here, I felt was traded very, very well. I felt we traded this range extremely, extremely well. When things went wrong was when we had this massive breakdown very quickly, basically invalidating a lot of our bullish structure and just all of that happening very, very fast. Yeah, and that's why we always do try to hedge TOML is that, you know, today was a perfect example of why you hedge. Today looked great for that bullish upside. It started to look like we were building that handle, and then what happened? Just dumped off. Okay. And not only did it just dump it, it entirely invalidated all of the bullish structure that was previously built. In the span of what, an hour? Something like that. So it's always good to hedge. Um, it would have been ideal if we took additional puts at these call entries as well, but I didn't. That was the real mistake that I made today is that I didn't take additional puts with these call entries. Yeah, they're just absolutely just toasting this thing today. Those puts we had earlier would be $1,800 a pop. And so far they've given us just zero reprieve to really build any positions off of. Pulled up very slightly here. Don't back down. Volatility is probably going to be over 100 at this point. Yep, it's at 102. So this is even higher than it was, excuse me, on Friday. So at this point, I'm not really trying to chase calls to the upside. I'm just kind of waiting for our upside so that we can position additional puts. Yep, and they have fully taken out that level too. No, I'm not expecting the 715 today, but the 715 is looking super, super likely. I was expecting this a lot closer to next week, but they are really pushing today. Now, we're not going to be able to get a full 20 mile upside here, I don't think. But I think that if we do get the upper Bollinger on the 1 minute time frame again, then that will be a quality put entry. Semiconductor is very likely heading to that 514 range. Excuse me. Let me see about the helicopter. Yeah, so the news was that Iran shot down an Apache and that Trump's not happy about that, so. Let's see, your volatility is at the 103. Again, it was at 89 this morning. Now I am looking on the 1 minute time frame for an entry into these puts. Ideally, we want to see a push into the upper Bollinger. Maybe starting to get a little bit of reprieve here. Alright, so I'm going to be starting to target some of these. Let's check. I want to look at these 723 puts. It's not the most ideal entry, but with the 1 minute time frame, we are at the 5 mil, which can lead to a rejection to the downside. Can't believe semiconductors were at 588 this morning. Currently at 522. Well, 524. Just barely any upside to take these puts on. Makes it really hard to take puts when they don't give you any form of reprieve. Starting to get a little upside here, so we might be able to get lucky and hit that 726. Which if we do, then it will be an opportunity to take additional puts to the downside. Now I am starting to add some of the 6 strike puts on Success for July 26th. Those are currently about 111 per. Yeah, we're just not getting very good reprieve here in the SPY. Volatility is still pushing very high at the 102.81. So if we can push up to this 726 here, that'll be the upper Bollinger on the 1 minute time frame. And if we're even luckier, we can get up to the 728. Then that will be a solid opportunity to take some puts to the downside. Okay, so we can actually start adding to some of these 723 puts. Only got lost to my watch list. So I'm looking at the 723 puts, and that would basically take us down to the low of the day, which I think based off of the conditions of today, I think that's super, super, super reasonable. Can't even use the 722 puts if you want, but I'm going to be personally using the 723. So I'm inside the 723 puts now. And if we do pull to the 5 mile or to the 20 mile on the 5 minute time frame, then I will go ahead and add a few more of those puts. Okay, and we should be set for the further downside. These 723s should do very well for us. Basically been waiting all day for this type of entry, so not too worried about it, like rejecting to the upside. Remember, the lower Bollinger on the daily time frame's at that 727 range, so we have to close below that. It's extremely likely the market's going to attempt to do that. So I think those puts should do very, very well. Alright, and I'm going to be very lightly adding to those puts here. But again, with our volatility being absolutely just super, super, super elevated on the day, we want to be targeting puts. Okay, so have a put entry right here. These are the 723 puts, and that would, take us down to the low of the day. If we continue pulling upward, and we pull upward all the way to the upper Bollinger, then I will continue to add to those puts because very likely we are going to be trying to close underneath that 727 today. So that's the thesis currently going for, what we're looking for. Sorry for sounding discouraged, everybody. I'm just a little down because we did have these puts basically bought right at the top of the day, and those puts would have ran to like $1,800, $2,000 per. Um, it's just a terrible feeling. Um, when the day, originally looked very good, we traded this very well, and then it just broke down. And from breaking down, we didn't have, additional puts to continue writing the entire way down into. So, really unfortunate on that part. But aside from that, I'm still happy with how the trading session went. Um, Even though it didn't go exactly as planned. Even with these call entries that I took here at these two ranges, I'm still up on the day. And hopefully everybody else should be. Um, if not, then that just means that you likely missed that earlier put entry. And, there was really no call upside to be reclaimed in here, even if we did try the few entries that we did. Um, I currently like this range for puts, again, because we should be closing below that 727. And, we're not wanting to fight the trend here. I think some people might have misunderstood that, but not wanting to fight the trend here at all. Simply just been looking for a range to take puts in, and finally we're at that range. Um, so everybody should be able to profit very heavily off of this position. Again, we're just taking this down basically towards the low of the day. So between the earlier puts and between this position, everybody should be doing very well. I'm not looking at this as a cup and handle or anything else like that. Um, this is not structure you want to fight. And the main thing you're not wanting to fight here is the volatility. Volatility has just been absolutely massive today, and this isn't going to be pulling down towards the end of the day. With our daily level having the lower Bollinger at that 727.70, the market will be trying to close essentially at that level or below, which means that the puts in this range are very, very quality. Okay. So I definitely stand by that one. Not really looking for bullish upside at this point. We have a very, very crucial level, literally right where the market's pretty much at. And I think it'd be absurd for the market to not take that level. We should be getting a breakdown here very soon. Yep, I'm sure about the puts. I would not be worried about those at all. I think that this is still very, very, very indicative of wanting to break down. Just have to remember that all technical traders are really looking for this range to add puts onto. So a lot of people, um, and I haven't read Webull chat or anything like that, but I can almost guarantee you a lot of people were not able to catch a lot of this downside today. Um, whether they were bullish on calls or just didn't take puts, things like that, cut puts early. Um, but from institutional traders, we would be looking for that 20 ma, okay, to be repositioning. We would be looking for that upper Bollinger to be repositioning. We have not gotten that throughout the entire session, except for this point, okay, other than earlier in the session. So use this level. Don't let this level, slip from your grasp. This is very likely building liquidity to push us further downward on the day. I would not be looking at this as, the anticipation of going bullish. Our volatility is absolutely just cracked right now. It's at 102.08. So dealers are hedged for the downside. They're not closing those hedges for the downside yet either. And because they're not closing those hedges for the downside, that means that our downside should be landing very well. So I'm not worried about those puts. In fact, as I'm literally saying this, they're recovering extremely well. So those puts should be doing very well for everybody. And it might look like a small move, but this is still a $5 downside. Okay. Within a standard SPY trading day, that might be the entire range of the day. So these could be very, very quality puts here. Okay. And I know that I'm looking to profit from them. And hopefully everyone else is able to. But I would not be looking at this as the market trying to reclaim support at the lower Bollinger. Could that be the case? Absolutely. But I don't think that's what's going on here. I think that this is further liquidity to push us downward. And again, if we do push up to the upper Bollinger here on the 5-minute time frame, then that's just simply an additional entry into puts, because very likely one of these ranges are going to break down again and take us into the that 727 range. So if it's not these puts at the 20-mo, then it'll be the puts at the upper Bollinger. But we will be keeping all these puts going because the downside target is very, very prevalent and present. And the algorithm should be aiming to grab that. They have rejected support. And by support, I mean the 5-day moving average, 10-day moving average, 20-day moving average. With all those ranges being rejected, then now that puts us into the lower Bollinger. Lower Bollinger, usually to secure that level, you want to see a close below that range. That means we should be expecting a close below the 727.63. So, long story short, those puts should be doing great for everybody. And it was specifically kind of that entry that we were looking for as well. So I'm tacking on just a few additional 723s here, just to bring my average to 77, or 0.77, excuse me. And again, these are the 0 DTE puts. I'm not wanting to swing puts into tomorrow, even if we are anticipating a lower low on the lower Bollinger. I just don't want to commit to that yet. Now make sure you're not full porting the puts here, okay? Because again, we can potentially see this upside all the way to the upper Bollinger here on the 5-minute time frame, which that pulls us to about that 733. But that would give us, a massive downside. That'd give us almost a $9 downside to target. And with volatility being as high as it is, I think that that downside target would be, extremely, extremely, extremely likely to hit. So that's what I'm looking for. Why would it come down $9? Because again, on the daily time frame, it's this lower Bollinger. You have to remember that the majority of the market is traded by machines. Okay, machines like levels that are present within the moving averages, and the standard moving averages and the Bollinger Bands are some of the most archaic, but built upon systems that are out there in terms of indicators. So with us rejecting support today, that leaves, which I don't want to show all these drawings. Hold on. Let's go to the SPACs really quick so that I can show you what I'm talking about. Is that with the lower Bollinger being right there, the machines are either going to say that, okay, we're going to be grabbing this lower Bollinger range because that's where a ton of gammas, placed at, or we're going to be reclaiming some of these support ranges. Well, this morning we saw a huge rejection of that support. Okay, and now we're at the lower Bollinger. And the lower Bollinger on the SPY is at 727.60 something, which means that to secure that level, you need to close below that level. Okay. So for the SPY, if we pull up towards that, sorry, let me hide the moving averages. If we pull up towards this 732, 733 range, then where's that downside? Well, you target that 727 again. How far away would that 727 be? Roughly $5 to $6 away. Um, assuming that the market wants to claim that level. So that's the thesis behind that, is that there is a real reason to push down and, you know, reclaim that 727 range. Yeah, it's just really unfortunate that we didn't see the volatility and everything picking up until basically after we closed our puts today, or else today would have been, an absolutely killer day. It's unfortunate, but there's nothing we could do about that other than move forward. And moving forward, we either have to identify, is the market going to try to reclaim support, or are we going to really try to close below that lower Bollinger? Well, based off of everything I'm seeing, we should be trying to close below that lower Bollinger. Volatility is pulling back a little bit, but it's still very, very, very high. Again, when it's in this red range, which is, the 98 plus, that means that dealers actively have hedges going. Okay. Now, as a dealer, why would you actively have hedges going? Because you expect downside. That's the one true answer for that, is that you'd be expecting and anticipating further downside. You're seeing downside gamma, and we're not really seeing them closing these positions out too much yet. There's still a ton of dealers tied up into these volatility positions. So for me, it's kind of like, this is what we've been really looking for all day. So don't really fear it, use it to your advantage. We've been looking for a quality put entry throughout the entirety of the session, aside from the put entry we had this morning. The market's finally giving us some put entries, so use it to your advantage. We still have plenty of time in the day. Volatility is still very, very high, and we absolutely can reclaim a majority of this downside. Again, we were all the way at the 746, almost 747 today. Pulled down to the 722.59. So with us being at this 730, is it unreasonable for us to pull down an additional, between $3 to $5? Not at all. We've technically pulled down, um, you know, over $20 on the day so far. Now, if we do get to this upper Bollinger here, I will be exiting those 738 calls that I had earlier, because those are down, but they're starting to regain a little bit of premium. And at that level, I'll be very happy to exit those positions and just pile into the downside. The trend has been set very, very clearly today. We're in a very, very deep downtrend on the day. Can this shift? It can. The market, anything can happen. But it's very likely that this is just continued liquidity to push even further downward. Just make sure you're not full porting into these puts. Again, even with these 723 puts, yes, I'm down currently, but I took very light positions. Um, so if we're going to see the support reclaimed on the day, then, it's not going to be the world's biggest loss. Um, I don't think so. I think our puts are fine. Again, this is we've been waiting for this movement all day long to be able to add additional puts. So, don't get shaken out now that we're getting our move. Okay, this is exactly what we've been waiting for. Everything's still telling us that we're going to be continuing selling today. And again, if we push up to the upper Bollinger, that would be an even better put entry. Only reason why I decided to enter a little bit at that 20 mile is because we haven't been able to reclaim that 20 mile all session. So nobody should have ported puts there. Um, yes, those 723 puts are going to be down currently, but this is the liquidity to continue heading downward very likely. I know it could be hard at times. Now, I will be exiting the rest of my calls fairly soon here. I'm really looking for that 732, 15-ish range. And from that call exit, I will be entering into additional puts to the downside. Volatility still elevated. It's at 170. I know many of you aren't happy about this pushing up against the puts, but I'm actually really happy because we've been waiting for really quality put entries all day. And now we're finally going to be able to have that opportunity. Even if the current puts are down a little bit, I'm not worried about that. So once we hit that 732.28, I will be looking to enter into additional puts. Volatility still holding strong. It's at the 163. Basically looking for volatility to start picking back up again very soon. Starting to see volatility pick up a little bit. It's at 163. Again, I'm not worried about the puts right now. I'm very confident that the market's going to try to head downward again. I know everybody doesn't want to see it, but I'd actually prefer if we hit the 732.25 before we head down. That would give us a very, 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 very good put entry. Might get our level here. Which again, once we do push that level, I'm exiting the rest of my calls and entering into further 723 puts. Volatility still holding strong, but we should be getting our entry very soon here. Oh no, try not to have a heart attack. Just have to breathe. Excuse me, I keep yawning. Alright, so our upper Bollinger is coming in, it looks like. So 732.91 is where that level is fully at. So then I'll be looking to add to the puts once we cross above it. So I have my calls stopping out at the 732.97. And from that point, I'll be adding into the puts pretty heavily. Excuse me. I'm not worried about the theta. We only have, basically an hour and a half left in the session. Did you guys end up buying just like a ton of those 723 puts? Because we did talk about adding very lightly at this 20 mile range. So it's like even though they're down, nobody should be really having their portfolios being burned over it too hard. I set my call stop loss to or the market conditional order to the 733.35, just because we did see the upper Bollinger tick upward slightly. So again, that's the range that I'm going to be using to exit pretty much all my calls. Okay, and once we push our level here, I will be entering into the puts. So just another 30-40 cents more. Now I'm going to be tacking on some of these 727 puts because they're actually fairly cheap at this point. I think we got caught into a really high IV spike on those 723s, which is why they're down so much. But I am going to be adding to the 727s once we get that range, because they're basically the same price. They're only 40 something per. Okay, so I went ahead and added some of those 727s. Again, not a ton of positions. Okay, nobody needs to be blowing their account here. Okay, now that we have pushed this upper Bollinger, I'm going to be looking for our volatility to start spiking back upward again. Because again, we should be pulling below the lower Bollinger on the daily time frame to secure that level. So that's what we're going to be looking for at this point. Had a very good put entry on those 727s. And they will recover any of that lost weight in the 723s. So now for our volatility, we are looking for it to tick back upward. It's currently at 98.83. So of course the 723 puts are down, but the 727s are doing very well so far. Now we just need to have our continued downside. And basically close below the lower Bollinger. So that's what we're looking for now. Volatility at the 98.61. I am expecting a volatility spike pretty soon here. So very likely any of the weight that we gain from these 727s are going to cover the loss from the IV on those 723s. Plus hopefully pull profit on top of that. So volatility is at the 98.61. Again, we do want to be seeing our volatility ticking upward. Now, my 727 puts are already up 60%. So nobody should be complaining. Guys are gonna drive me crazy. Why did the market crash so far? I have no idea. There wasn't really any news or anything related to it. Um, if anything, it's probably due to the CPI being released tomorrow and the market very likely expecting it to be a hotter reading. That's what I'm assuming anyway. But there wasn't any news, coinciding with this downside. So these puts doing very well, up 75% so far. So again, we're looking for the 727 or below. So we have a lot of downside on these puts to go. We are currently at 94%. And let's see, our volatility should be picking back upward. It's currently at 98.71. Our puts are now at 120%. So hopefully you could see why I was saying that these are really good put entries and you shouldn't stress too much. Even if those original puts were down a little bit. Volatility is starting to climb again, so it's at the 98, 93. Not very concerned with this buying in here just yet. Volatility is very high. And on top of that, we have a lot of reasons to pull to the downside further. I know many are looking at this as potentially a cup forming with a handle. It's not exactly what I'm seeing though. Very likely this is going to try to form an inverse cup to the downside. And we are tapering away from the upper Bollinger as well. Basically at this point just need to see volatility pick back up slightly more to show us that dealers are going to be hedging for that, continued push into the downside. Just waiting on our volatility to pick upward to really give us that clear signal that yes, we're going to be heading down. Starting to see it tick upwards slightly, so it's at 98.41. It was at 98.30 something. But ideally, I want to see that pull over the 99 range again, potentially even the $100 range again to really signify that, yes, we're going to be heading to the downside. Now I want to look at semis as well, because we should be seeing semis starting to break down in here. VVIX sitting at the 98.46. Still just waiting for a further taper from the top here. With this upper Bollinger entry that we did take, which I want to actually drag it to the upper Bollinger because pretty much timed that exactly. But from the upper Bollinger, we should be expecting a pull down towards the 20 MA at the very, very minimum. Okay. Even if we're not going to be getting the full, underneath the 727 that I am expecting. But we should be expecting to pull back towards that 728.75. Okay. At the, you know, absolute minimum. So I'm not stressing about these puts here. It's very likely that we will be seeing volatility picking up very soon and very likely getting that move down, at least to that 728.74. But I do expect and anticipate a lot further than that on the day. Oops. Basically just waiting at this point for volatility to pick up, for the selling to, begin occurring again. So I'll be looking for a rejection within semiconductors here to form this head and shoulders. So that's primarily what I'm looking for to really kind of kickstart this selling. Volatility has pulled down a little bit, so it's at 97.90. Still have a full 2 hours left in the trading session, so just be very patient for our level. Not too worried about the theta destroying the contract. Either we're going to get the level or we won't. Volatility is at the 98.03. Starting to get our pull down a little bit here. Again, I'm looking for a rejection of semiconductors here. That'll be really important to completing this bearish structure, and that would help take the SPY down as well. Volatility is pulling down slightly, so it's at the 97.57. But we do want to be seeing that pulling down. Looking for this to continue tapering away from this upper Bollinger here. And again, give us that 20 mile range. I'll be right back really quick. I just want to get something to drink, but I'll still be here and talking after. Oh, I have the 727 puts going currently. So if you're looking for a contract, that's what we do have going is the 727 puts. We also have some of the 723s. Um, we did kind of enter those with high IV, but the 727s should recover all that weight and then some, assuming we get the move down that I'm expecting. So, um, anyway, I'll be right back in just a couple minutes, everybody. But we should be expecting our move to the downside fairly soon. Alright, everybody, I will be right back. Sorry about that. I'm back, everybody. So this is kind of something that I'm going to be talking about tonight in tonight's class. However, it's a great question for everyone who's, having struggles at the moment. Okay. Why do we trade? What are we trying to get out of trading other than making money? What we're trying to do here is we're trying to find value in current instruments that are undervalued to be able to find future value in those instruments. Okay. So, yes, our puts are down currently, but you have to buy puts on the upside for them to move downward. Yes, you could have bought into this market earlier where you pretty much could have bought a put at any moment and it would have printed. Um, but that's because we identified that there's value coming in those puts. Okay. Kind of the same thing with the current moment. Even though the contracts may not be working in our favor, that's why we take them. We take them to find that future value. So try not to get so stuck on what's happening with the exact current present moment. Okay? Because regardless, you're buying these contracts in the present, hopefully that they are undervalued at that moment. Okay? Now, whether these puts work in our favor or not, you know, I do believe they will, but whether they do or not, we can't read the future. All we can do is read the signals that are, present. And with that, we have to focus on our entries that we know usually do have a high consistency of working, and our exits that do have a high consistency of, being obtained. When we enter puts, and it's like the puts we entered this morning, we enter at that upper Bollinger range. We were looking for this upper Bollinger range for these puts to be entered in later in the afternoon. And with us, taking that upper Bollinger, that's taking the opportunity for these puts to become more valuable than what they are in the current moment. Okay. Does that mean that's always going to occur? No. Every single trade is not going to work in our favor. All we can do is, use the best of our abilities and say, okay, either this is going to continue running upward and claim some of these levels that have been lost for the day, or the market is going to try to aim for that lower Bollinger, which is, a very real level, and we're going to very likely go down and try to close that level. So I know it's hard when positions don't work in our favor, but that's also why you can't just full port positions either, because not every single position is going to work for you. It doesn't matter how good of a trader you are. You can be the world's best trader and you're still going to miss trades. And if you full port your trades, then all it takes is that single miss for you to blow your account up. Okay. I have a fairly large portfolio, and even on days like today, I take very small entries. So it's like, if these puts go completely haywire and they don't end up profiting, it's not the end of the world for me. I made quite a lot of profit this morning. I had a little bit of, mishaps with some of these call entries against some of this downward selling, but it wasn't very large. I I opened those contracts for the opportunity, and the opportunity did not present itself. Now, we've been having a very heavy selling day. From a very heavy selling day, we can see upside reprieve. However, again, we have a very, very crucial level that the market already has struck. Okay. There's a lot of reasons for this market to pull back towards this level, towards the end of the day, and that's what we're buying that opportunity for. So yes, the goal of the stock market is to make money, but we're here as traders. We're here trying to buy instruments that are in the present, undervalued, and find value in them later on. So if you're panicking over buying a couple positions, then you really need to reevaluate why you're trading, okay, and how large of entries you're taking. Because if you're really, really panicking over the two put entries we took on a day where we've been basically waiting for put entries, just because they're not working out correctly exactly how we expect them to, these should not be causing panic. These should be causing, at the worst, a small loss. So that's just something I want everyone to think about because it is very emotionally hard to not just stream trades. I mean, I have, countless people watching every single move that I make, whether it's a mistake, whether it's a gain. It's very, very emotionally stressful. And then on top of that, um, I'm also trying to keep everybody else very stress-free and relaxed in our positions. Okay. Um, because it's again kind of like when we entered these puts up here, they were running against us for quite a while before we started to have that pull down. Okay, if we panicked at that level and sold those puts, we wouldn't have seen any of the downside today. So all we can do is enter at our quality entries and use our skills that we know have consistency to them. We got puts today. Um, I'm not sure why people are saying we got calls. Um, we very specifically targeted puts today. It's a single trade, Johnny. Um, if a single trade's gonna blow up your portfolio, then you need to be having more funds. And I can't say that in any other way. Um, these two trades right here should not be blowing up anybody's portfolios. We're trading for potential. Okay. Now, if you're a better trader than me and you have nothing to learn, then, I don't know why you're here. I don't want to get anybody, I don't want to get on anybody because I understand it feels emotionally devastating to lose money, especially when you don't have a lot to lose. I mean, I get that. I've been there. Understand, I literally have pulled myself out of poverty by trading. Um, I understand fully what it's like to have a portfolio that doesn't have a lot of money and then you go put a, position that you think you have high conviction in and then it just blows up on you. It sucks. It's a horrible feeling. That's the one thing I don't want. I don't want people copying my trades, you know. Um, I'm always going to talk about my entries and exits because I'm very transparent about what I do. Whether it's a win or loss, I'm very transparent about what I do. Um, that's one of the primary ways of knowing whether someone's genuine or not is if they're going to be very transparent about what they do and why they do what they do. Now, I had perfectly good reasons to take the puts at these two ranges. Um, you know, if you disagree with it, you don't have to take them. Understand that. These are my trades, you know? Um, and I hate to sound blunt about that, but this is my trading, okay? Um, no one really has a right to tread on what I do here in terms of my trades. This is my portfolio. If you want to copy my trades, because I do have success, I do have consistency, then by all means, please copy my trades. However, if you're going to copy my trades and then complain about them because a trade doesn't go correctly, then you're not doing it right. Okay? You are not trading correctly. Um, I have I had a very good thesis between the two put entries that I took today. And, you know, based on past trades I've done, I've seen that exact pattern play out. Is it working in our favor currently? No, it's not. But it's not the end of the world. You know, tomorrow will come, whether you have money right now or not. It will come. And if you're diligent and if you want to learn and actually want to learn and not just gamble and, take the shortcut, that's why I think a lot of people want out of the stock market is a shortcut. And that's not what the stock market is. Stock market's going to take years of learning, years of education, years of trial and failure and success before you really get comfortable to where your emotions are in check, you know what you're trying to target with your trades, just all the above. Um, and if you're not going to be patient for that, then I have nothing to teach you. So that's all I really have to say about that. And I'm not taking what you're saying, Nimble, as criticism. Yes, we absolutely did take some of the 745 calls in here. Okay. Um, but that's after we made quite a lot of profit on our puts, and the calls were very cheap. Um, we had every reason to target that upside at that moment because we had this cup potentially having that handle formed, and support was right above us. So we had every reason to look towards that 745 range. Once that started breaking down, we talked about it. Um, and I believe at this range, we discussed cutting those for different calls. It's either at that range or at that range. I'm not saying I can't handle criticism. It's not even about you randomly. That's not the comment I was even really talking about. It was mainly from Joni where they're saying all those contracts aren't working out at all, my guy. You know, so those type of comments. Um, so it's like if you're better at taking contracts, then be my guest, right? Um, has nothing to do with not being able to handle criticism. When we push into the upper Bollinger, yes, I will. I will be averaging down on some of those puts. And I'm not trying to make anybody feel bad either. It's just either we're gonna work as a team or we're not, you know. Um, if you're wanting to watch a streamer just take contracts and you know, go nuts and not explain stuff and do call outs, then this really isn't the channel for that. Um, I do explain everything I take. I explain the thesis behind everything I take, why I take it. Um, and that's what I'm looking for, you know. I am an individual and I am a trader, so there are specific things that I will be looking for. So we have an hour and a half left for the market. Okay. Now, ideally, what will happen here is that we will get back towards this 5 mile. And from this 5 mile, that'll give us not only a put exit, but it will give us the potential to have runners as well. Okay. But we're looking for that 20 mile for the put exit for the majority of the puts. Yes, I will be averaging into my 727s once we do get to the upper Bollinger again on the 5-minute time frame. But that's the level I'm looking for to close our puts out. Now our volatility is at 96.59. So I am looking for this to start pulling upward. It is very close to the lower Bollinger. So if we're going to be seeing that taper, then I would be looking for it to pull towards that 20 mil, which is back at the 99 range. Now there is a very important chunk of liquidity here on semiconductors. So I do want to see if this breaks out or pulls down, because that'll be very, indicative of where the rest of the day will be going. Because either we're going to be taking this little bit of liquidity right here, or we will be losing that level and continuing to break down again. Volatility at 96.43. Volatility is at 96.27. So we do want to see this pulling upward. And we do want to see semiconductors rejecting this range. I think it's just very easy for emotions to get high when positions aren't working in your favor. And I fully understand that. But again, we don't open positions to burn money either. Um, there's a purpose to the positions I open. So if we get this push into the 736.99, I will be looking to enter additional puts. Still a little too soon to say if semiconductors are rejecting this range or not. Volatility is still sitting fairly low. I mean, it's elevated, but low compared to where it was. So it's at the 96.24. Potentially seeing semiconductors starting to reject this range. But like I said, still a little too soon to determine that just yet. SPY has skipped this entire range of liquidity as well. Semi is looking to start rejecting this range, which that will be very good for our puts. Volatility starting to tick up very slightly, so 96.28. It was at 96.22. Now our first Exit on these puts is going to be at this 732.61. After that level, I will be looking for that 727 push to the downside. Volatility starting to tick up a little bit, so 96.38. So if we can see a continuation with that, if we can see a continuation within this pulling down, and a continuation within semiconductors rejecting this range, then that will be all good signs that our puts should do well. It depends on what we see. If we start pulling down towards this range and say the market closes when we're at this like 728-ish, then very likely we would be trying to hold some of those for that 727 below. But ideally we will be trying to exit everything before the end of the trading session. Volatility did tick down slightly. It was at the 96.30 something. Now it's at the 96.16. So again, we want to be seeing this pull upward, not downward. But if we see continuation within our SPY selling, and if we see continuation within semis selling off, then the volatility should start picking back upward fairly quickly. Mainly looking for volatility to start picking up at this point, because that'll be, the primary indication that dealers are hedging for the downside, and downside hedging means that they are, expecting much further downside than what we're seeing currently. So again, I'm really trying to see if we can close below that 727. That's a very crucial level. So if there's the room to do so, we're going to try to really squeeze every penny out of these puts that we can. Volatility is at the 96.26. Semiconductors, I really want to see them basically exit this yellow box here on the downside. That'd be, very crucial level for them to start trading into this next liquidity range. Volatility still at the 96.25. Now, if everyone took those June 18th SOX puts that we talked about earlier, then you should be up in those quite a bit. Um, Mine are up 36%, and that's for next Friday. Those are the 6 strike puts. And again, the SOX S puts are basically like taking semiconductor calls. So once we hit that low of the day, for me that was a good opportunity to add to those 6 strike SOX S puts. Volatility at 96.18. Do you have a little bit of an inverse cup there on the 1 minute time frame? Same thing with semis. So basically should form this smaller inverse cup, then a handle to the downside. So we will see if that plays out. Yep, we have CPI data in the morning. Not really wanting to hold puts through that, other than, some of these dated SOX S positions we have going. So let's see if this breaks out, but potentially we do have this head and shoulders forming. So if we do see a rejection in this right shoulder, that would take us down on the SPY as well. Volatility still pulling low. Looking very closely at semis here though, because again, if we can lose this right shoulder and head to the downside, then that would take us into this next range of liquidity, which, we'd very likely continue breaking down from there. Now again, if we do pull up to the upper Bollinger, I will be taking additional puts, even if it's close to the end of the day. Volatility is starting to pick up a little bit. It did drop all the way to the 96.06. It's currently at the 96.13, so not a very big spike yet, but still present. People are still hedging positions. Right shoulder looking promising, but I don't want to talk too soon. A little overextended, but this right shoulder is still present. Either this is going to be that head and shoulders, or it's going to form into a cup and basically form a handle from that. Volatility picking up very slightly here. Cup is not fully closed yet, but still looks very solid anyway. If that cup doesn't close, then this head and shoulders on SPY is still prevalent, but that's a very tight range. Same with semiconductors here on their right shoulder. If we start pulling downward and lose that level, then that right shoulder liquidity will work out. We'll see if we get the rejection in here or not. Volatility is at the 96.15. SPY did close that smaller cup. It looks like semiconductors is going to do that as well. Volatility has pulled down. It's at the 95.93. And again, if we do push into the upper Bollinger, I will be taking additional puts. VVIX pulling up slightly while we're potentially getting our put entry here. Now we actually did not get our entry. Doesn't mean we won't though. Volatility is at 96.16. So that's starting to pick up a little bit. Volatility is starting to pick up, so it's at 96.23. It was at the 95, 90 something. Potentially this cup and handles forming here, so do have to be a little cautious. Anyway, those 738 calls that we took down here, if anybody took them, didn't do bad. Could have been almost in the money at this point, but I did sell them around this range. Hold on one second. Sorry about that. Now our volatility is still at the 9610, so it's not really moving too much. We're getting very close to our 5-minute upper Bollinger here. Have about 46 minutes left in the trading session. Went ahead and added to some 733 puts. Right in that range. Volatility is starting to pick up a little bit, so it's at 96.25. Sunrise push towards the 560.25. Starting to pull back a little bit here. Not too much yet. Volatility is slowly picking up, so it's at 96.27. Now, summaries are continuing to pull downward. So I am looking for that to translate into the SPY as well. Volatility still at the 96.24. What's going on with QQQ? Down about $2 off of that rejection. Alright, so again from those 533 puts that I entered, I'm looking for the 20 mile here. That'll be the first exit, and then after the 20 mile, we'll see if we can get the major push down into the 727. But that's the plan right now. And I'm going to set a market conditional order to be less than the 734.51. So if the market pulls below that level, it'll take the majority of my contracts and will leave me with a few of my puts to run the rest of the way if there's room to run. Volatility is picking up pretty greatly, so it's at 96.50. So there's that leg upward in the volatility that we're looking for. Just need to see continuation of it. Now these 733 puts already have me almost positive all over the 727s that we took at the 20 mile here. And the first 733s we took up here. Or the 723s, excuse me, and then the 727s. So far so good. Just need continuation. Volatility is at 96.57. So we are starting to see that pull up even further. Should give us our 20 mile exit here. And again, the 20 miles at the 734.45. I have my conditional order set to the 734.51. Then I'll let the other contracts run if there's room to run. Volatility at the 96.59. So that is starting to pick up pretty greatly. But we do need to see a continuation within our selling. We should be heading to our 20 mile at this level, or at this range. We're starting to see a lot of the signals wanting to take us there. We're seeing our volatility pick up. We're seeing semiconductors starting to sell. SPY starting to sell a little bit. So we should be heading down there before the close. Basically just looking for a continued upward spike in the volatility to really tell us that, you know, we're going to continue heading downward and securing that level. These 733 puts should be working out very well for everybody currently. And we're nearing our range on the exit, but not yet. Again, I have my market conditional order set to the 734.51, so that's slightly above where the 20 MA is located. Another 50 cents downward, and we'll be good to go. Now I'm going to move the market conditional order up very, very slightly. Never mind, it hit, so. Okay, cool. Now we have some runner puts. And these runner puts we will try to ride into glory. So I'm continuing to keep all my 727s just because if we see a continuation in the selling into the end of the day, then that's very likely indicative of, wanting to head down towards that 727 range. But I do still have a few of my 733s going. Willing to pretty much ride those down towards the lower Bollinger. So I'm going to set a level at that 731.21. So market conditional order, 731.21. Okay, and these 733s should be absolutely killing it for everybody. Mine are currently up over 360%. Okay, so I don't want to hear anybody complaining about anything for the rest of the day. So those positions should do absolutely great. Yeah, these 733s are absolutely just killing it right now. Very, very happy about that. That pretty much made my entire day better. So, haters can say what they want. In the end, we're gonna win. So I have my 727s running, and I only have literally a couple of these 733s going left, um, just so that we can continue to capture our downside. Because there's a lot of downside to capture. So if we're able to, then we're going to work very hard to, like I mentioned, squeeze everything we can out of these puts. Yeah. Yeah, pat pat. Yeah, those positions are just absolutely blowing up right now in a good way. And we're seeing our volatility still continuing to rise here. It's at the 97.37. So very likely we will be seeing this continue to pull upward as the SPY and semiconductors pull downward towards that range that we're looking for. Yeah, these puts are up over 400% right now. So nobody's allowed to say anything. I'm gonna mute just 1 second. Sorry, my daughter's having a crying fit right now, so I'm gonna be mute for just a few minutes. Sorry about that. Okay, anyway. Everybody should be having a good day at this point now. Um, if you were able to take those 733 puts, then, you know, they were over 400 something percent at one point. They're currently up 350%. Now I'm basically just waiting for our 727s to start running towards, in the money or at the money. So I am looking for quite a push downward here. And again, this is kind of why I was wanting to shorten this range to begin with. I know some people judged me about that, but this is why I was doing that. And so far it's paying off massively. there's a lot to learn from a day like today. Days like today are very good to mark down and really go over. Um, because it's like we had the potential to write these puts all the way down, basically like 25 something dollars to the downside. Um, but we didn't catch that signal in time. We exited the puts in there. Yes, we made great money off of them, but there was, an absurd amount of money to be made today. But this is also why I say it's like, how do I say this without making it sound bad? You know, yes, it absolutely sucks to lose money, but that's not the end goal. The end goal is learning the mechanics and learning how to maneuver these trades and learning how not to be emotional and learning how to identify these quality setups. And all of that will culminate into something greater than the money that you've lost, whether it's, you know, 10,000, 50,000, 100,000, doesn't really matter. Um, and I could say that because I've been down that road. Like I was down over six digits at one point, okay? Um, I could say that from firsthand experience. Those losses mean nothing until you actually learn how to trade. Um, all we can do from our losses is identify what really happened. Was it emotions? Was it just overextending the position? Um, there's so much to gain from sitting down and learning the trading rather than focusing on the shortcut, which that's really what I think a lot of people want to do with the stock market is focus on the shortcut that, oh my gosh, I can make a whole lot of money really quickly. Um, yeah, but you can also lose a lot of money very quickly too. And that's really what the key definer between a consistent trader is being able to handle that risk, being able to handle your emotions and being able to get out of bad situations with the positive. For example, today we bought those 723 puts in here, which the IV was super, super high on them. Um, Moved up towards what was this? The 734-ish, 733 range. And we took 727 puts. And by that point, the 723s were just absolutely decimated, right? Um, but we still kept with it. We still understood that there is selling to be had today. And so we shorted up here again when we had our additional entry. We took the 733 puts, and from those 733 puts, we recovered the entirety. Well, at least I have. I don't know if everybody else has yet, but I have recovered the entirety of the loss from those 723s, and I'm still holding the 727s just in case we do get that major push down. But I've already profited immensely on the day just in this range right here. Okay. That's not counting for the trade that we took earlier, where we rode puts down almost a full $5. Um, you know, there are good trades to be had, and getting emotional or getting down or sad or anything else will really, really hinder your ability to find the quality trades to make a comeback on. Because for me, this trade right here completely outweighed everything that we set up earlier with those puts that ended up, quote unquote burning. So that's why I say, don't lose hope. Um, just really hunker down. Let's focus on keeping everyone's emotions in check. keeping everyone's mechanics good. Whether you want to judge me for this entry on these 723s or not, the reason why I took those at that range, because we haven't been above the upper Bollinger the entire session, and there was a very high likelihood we could have rejected off that 20 mile to the downside. So that's why I took the 723s there. Um, Again, I know some people might judge that, but at the end of the day, I'm still sitting here trying to trade, trying to find value in, you know, in the present, trying to be able to expand on that in the future. I would really love to see the 727 as well. Um, that would make today a very, very, very good day, which I think we can head there. We're seeing our volatility starting to spike up quite a bit. It's not at the 97 like it was, but it's at the 96.90. Um, with some of the buying reprieve that we did see, especially in the 1 minute time frame, we pulled down to the lower Bollinger, pulled up towards the 20 mile, and from this 20 mile, I'm expecting a rejection to the downside. If we don't, then that's still okay because we still have this very present head and shoulders building here on the 1 minute time frame. So if we pull all the way up to the upper Bollinger and then have a rejection, this is still going to be the structure that's going to send us downward. So that's what I'm looking for currently, even though we don't have a whole lot of time left in the trading session. Doesn't mean we can't get that massive downside still. Yeah, I know how that feels. I mean, it's kind of like one of my first really, really big wins where this was years and years and years and years ago. Um, it was some biotech company. I told you about this one, Scott, but it was that biotech company where the shares did a reverse split and the reverse split price didn't actually kick in. So we bought the reverse split shares at like 30 something cents a share and they ran to like 20 something, $23 that same session. Um, I turned $700 into like 17, 18,000 in that single day. I mean, I wasn't prepared for that. I wasn't expecting that. Um, but I can tell you how fast I burned that. It was gone easily within 2 months' time. Um, and that's the thing. It's like when you don't have that consistency, when you don't have the mechanics and everything, a big win feels great, but it's very hard to hold on to. Because it's very easy to, overextend into positions and firsthand how easy it is to basically blow your account up. So it takes a lot of time, it takes a lot of education, it takes a lot of work. And Scott, I know you're definitely here for the long haul, but for everyone else, we've all been down the same path. Even the best traders have blown their portfolios. Um, it happens to us all. It's a learning lesson. It's how we improve. It's how we grow. Not that I want to see anybody do that, but you know, it's very easy to do. The market is absolutely unforgiving. They don't care whether your position's worth $1 million in the current moment. It could be worth, you know, $0 in the next. Um, They have no issue with absolutely destroying people's positions. But this is why we focus on very structured trades. Even though we missed this morning with some of this massive downside because we did close our puts at the lower Bollinger, um, I still fully stand by that trade. I think that was a, 10 out of 10 setup that worked out perfectly as planned. Um, the only thing that didn't work out is that, again, we saw a lot of bullish structure leading into that, which gave us that conviction that, okay, maybe this is just a handle, rather than, oh no, we're gonna drop a whole 25 plus something dollars on the day. So that was a little hard to catch. Um, and even then, we didn't really have quality entries into the puts on this level, because it's like we could have entered puts at this red range, which probably would have been the best range to enter on, after that first initial entry. However, what would have made the market not turn back up? I mean, it was pulling towards that 20 month. The volatility was actually dropping at that level. So what was telling us to continue entering puts at that range? Really nothing. It was that massive leg downward that really started to make things spiral and make the volatility jump. So it's like in hindsight, this looks like a super easy day to just sit here and ride puts the entire downside, but it wasn't easy. It wasn't easy at all. And I think the good thing about the market is that a lot of us have experienced that massive loss. You know, there is an inverse side to that as well, where that can turn into a massive win. It's a little harder to see when, we are going through a loss. It's very emotional and everything else, but the market can turn in your favor very quickly as well. So if you're diligent, if you continue focusing on good entries, then eventually you're going to catch some of these really, really big trades. I mean, it's like these contracts that we took earlier. Yes, we cut them, in hindsight, we cut them early, but these contracts that we took for like, I don't know, 50, $60 a piece, they ran all the way to like $1,800 per. Okay. Um, that's the type of trade where your account just goes absolutely parabolic. And all it takes is a single good trading session like that for that to occur. Um, but you're not going to really get to that point until you start really taking these proper entries. So enough ranting out of me. I just feel like in a ranting mood because so many people were in the chat earlier just basically giving me flack, and it's like, well, at the end of the day, I'm I'm heavily in the profit on the day. Um, yes, I didn't get as much profit as I could have, but I had a very good trading day. I had a very successful trading day. My portfolio is not red. I'm up very, very heavily on the day. And that's what we look to do each and every session. So not really targeting anybody or anything, just mainly just talking, but so these 727 puts very likely I will be holding until the end of the session.
because we do have a whole 15 minutes to trade those. If we're going to be getting our downside, then, um, I'm going to be expecting those to really land. But this is kind of why I say, like, everyone who's really diligent, everyone who's really here to learn and continue the education, you're going to make your money back. You're going to not just make your money back, you're going to find a future in this to where you're going to be able to, you know, pay off a house, eventually pay off your kids' school, things like that. Um, this does lead you to greener pastures. You just have to really push through the hardship first. So that's enough of my rambling. I have faith in everybody. Um, I think each and every one of you can become a very, very, very successful trader. With this head and shoulders building here, the 727 is looking very, very, very reasonable today. So if you do have those 727 puts, I can't really give advice, but I would highly, highly suggest trying to hold on to them here. Because this is the type of session where towards the close we can see this entire range taken out, where come the after hours, which again we get 15 minutes within the after hours. Okay. We can absolutely pull down back to that 722.59. It's super, super reasonable today. And if that occurs, these 727 puts will be in the money, not just at the money, but deep in the money. Um, these could be worth easily over 300, 400, $500 each put, when they're currently worth like next to nothing. So don't discount those puts on today still. Now I do want to see a push to the lower Bollinger here. And on that lower Bollinger push, that's when I will be exiting the rest of my puts besides those 727s. Because very likely those 727s are going to be something that run in the after hours. Usually don't stream that long, but I will today. Um, I want to make sure that if there's a good exit on those puts that we do capitalize on it. Now, was anybody able to take these 733s when I called them out earlier? Because for me, this has been like immensely, immensely profitable. Um, so hopefully some of you were able to take some of those 733s. You took 734s, you champion. Well, I'm sure you're having an awesome day at this point then. I basically just have my two runner 733s left, which I'm trying to get down to this lower Bollinger to take profit on. And then I have the 727s, which very likely we're going to be holding into the after hours. Volatility is at 97.14. I do kind of expect that to pull upward towards the close today. Because with this structure here, this is really telling me that very, very likely they're going to try to close this entire range. Hopefully that's the case because that's going to make those 727 puts just absolutely worth bank. Yeah, that would run these 727 puts to about $900 per. And that's if we only get to the 725. There's a lot of IV inside these puts right now. So we should be getting our push down pretty soon here. Just look at volatility. Volatility is picking upward as well, so it's at 97.33. So kind of seeing a lot of the signals that we need to see. Volatility at 97.35. So still increasing as all this is going on. Really looking for that push down here to fully exit the 733s. Now for my exit, I have it set slightly above the lower Bollinger here on the 5-minute time frame. So I have mine set to the 732.45. So once we hit that level, I'll just be out of those puts without, holding on to much more risk anyway. And then we'll just run the 727 puts into the after hours. So my put should be taken here any minute. Just need about 30 cents more downside before those get cleared out. Volatility is at the 57, it's at the, or excuse me, the 97.58. So it is starting to continue to pick up. Now, if necessary, I will hold the 733s into the close today, if we don't get the lower Bollinger level that I'm looking for, basically in the next like 10 minutes. Volatility still picking up, so very likely this is to shake out put positions before pulling downward, because the volatility is still at the 97.65. Well, right as I say that, it decides to drop down to the 96.82. So yeah, very likely going to be holding these into the close. But very likely this upside push here is to shake out additional puts. Volatility is still pretty high, so very likely this is the shakeout. Eight minutes left, so it'll be interesting to see where they close. Expecting volatility to tick up pretty soon here. Which it is. It's currently at the 96.76. It was at the 96.60. So if this is an end of the day shakeout, then we will be seeing the volatility picking up. Would this technically be a lower Bollinger rejection if it closes above the 727? Yes, it would. Our volatility is still elevated here, even with some of this upside buying. But yeah, it looks like we'll probably be holding our contracts into the close and seeing what they do on the actual close. So 4 more minutes on the market. Volatility is still somewhat high. It's at the 96.59. About a minute and a half until the market closes. But again, we will have 15 minutes to trade the remaining contracts that are available. All right, market has closed. Let's see if we get our selling now. Still sitting at this 736.80. Now I'm going to be super patient here just because I do think that potentially they could be trying to push downward pretty hard. But if not, oh well. Starting to drop slowly at the 736.50 now. $736.40. Can't really check the volatility right now because it is closed. Well, no, it's still working, so it's 96.22. $96.06. Alright, with this buying, I'm going to go ahead and start closing some stuff here. So it doesn't look like we're going to get our 727 here. We do have the 1 minute time frame cup and handle forming. And we're starting to see a little bit of buying in the after hours with the volatility pulling downward. It's currently at the 95.61. So not really suggesting we're gonna have some massive pull down here. Now, there was just a massive share sale, but I don't think that's going to really influence things too much here. So, okay, that's going to be that. Thank you all for watching today, everybody. I know some people had a tougher trading session, but we were able to, make quite a bit today. Not as much as we could have. There was a lot of money left on the table. Um, but this is something I'm going to have to study a little bit further and see if we can find a determination of, at least in this range, how we could have, seen that this was coming. So that's something I'm gonna have to work on. But with that said, now I won't be streaming tomorrow morning, but I will be streaming the class tonight. So at 8 p.m. Eastern Standard Time, I will be streaming that class for all the subscribers. And other than that, I won't be streaming tomorrow, but I will be streaming tomorrow night for that class as well. So if you're looking to work on some things with me, then I look forward to seeing you there. Other than that, I hope you all have a wonderful day, and I will talk to you all on Thursday morning. So thank you all so much for watching. Um, Hopefully some of you were able to make profits today, but one way or another, we will all, get through this together. So take care, everybody, and I'll talk to you either in tomorrow or tonight's stream for the class or in Thursday morning stream. So have a good day, everybody.